All right, welcome to the channel. Welcome to yet another episode of my trading journey. So, for today's example, I would like to go over how to trade options on Think or Swim. The actual strategy I'll be using is cash secured put. The company I'll be using in this example is CRWV. The ticker is CRWV. Now, before I get into any of that, let's get one thing understood. I am not a financial advisor. Do your own due diligence before investing in the stock market or anything for that matter. I'm going to use the mobile app version, and I'm going to get logged in and we're going to get to it. Let's go. So here we are. We all logged on to Think or Swim, and as you see, the ticker CRWV, CRWV. Next, we're gonna go to the options chain, and the week we're gonna use is 13th of June 2025. You see that that's the top one, and as you see, there's a red flag next to it where it says weeklies. That's because I already currently in this trade. We're gonna pull that up real quick. So again, where you see that red flag, that's the trade that I'm currently in. That's the 120 put. Currently the bid is $2.90. The ask is $3.10. As you can see, bid and ask to the top of the option chain. So currently the market is closed, but anyway, we're going to take a look at this real quick and we'll see if I'm profitable or not. So as you can see right there where it says trade price, I got a credit of $2.80, and you see the bid and ask. So technically my P&L is $18.38 at the time of this recording. CRWV closed at the ask price was $140.65. The bid was $140.60. So let me give you the breakdown of the different ways that this can play out. So if CRWV actually drops to $120 by the 13th of June, I would pick up 100 shares of it at that price. And also, if I stay in this trade until the 13th of June, and let's say CRWV actually drops below 120, I'm still obligated to buying the shares at 120. So even if it falls to 118, 117, I'm still obligated to buying them at 120. Now I'm okay with that. You know, I've gotten, this is a stock that I wanted to hold anyway, and if that scenario happens, now one thing I can do about it, I can start selling covered calls to the upside. That's the wheel strategy. Maybe I'll do a video about that if I end up with the shares of CRWV by the 13th. Here's another scenario of how this can also play out. If CRWV is 140 by the 13th of June or higher, I get to keep the $2.80 of credit that I, and I also don't have to really wait until the 13th. I can also buy this contract back, especially if it's profitable for me, because as we get closer to the 13th of June, the theta will start running out on this. And theta is actually time decay. All right, if you found value in the content, please like, share, and subscribe. And also, if you'd like to get your investing journey started, I have 3 links that you can use. One is Webull, the other is Robinhood, and the other one is Moomoo. Any one of those links that you choose, you'll get free stocks from, and free stocks is free money. Let's go back to the video. Now, I'm pulling up the option chain again. I want to show you something real quick. And this is an explanation as to why I chose the 120 strike price for this particular cash secure put. Now, at the top, you see where it says delta. Now, the delta for this particular strike price is 0.19. If you subtract that number from 100, using the first 2 numbers, the 19, subtract that from 100, that gives you 81% chance of probability. That said, I like any delta that's at least 0.20 or at least an 80% chance of probability. Now, depending on the scenario, I may use 0.25, but I try not to go any higher than that. Now, this is a great way, especially for those of you that are retired or semi-retired, to earn some income on part-time. And as you see here, I'm going to show you real quick. This is not the first time that I've done it this week. This is the second time. The one on top, you see where it says 6th of June, which was today. I had sold a put previously, and that strike was 127. Now this one, I did receive $1.65 of credit, but here the P&L is 0 because it expired worthless. Because as you saw today, CRWV went up to 140 something and change. I showed it a few seconds ago. It never went down to 127, hence that's why the contract expired worthless. And I did it again before the bell closed. Now here's one other part to that though, in case I didn't mention it. That 127 price, I did have to put up 12,700, and this one I put on today, I did have to put up 12,000, but the first one that expired worthless, that money was returned back to me, so I put it up again. And again, if it doesn't go to 120, I'll get it back, and I'll get to keep the $2.80 credit. But as you know, each contract represents 100, so that's $280 that I'll get to keep if CRWV doesn't go to $120. Now I'll say this on buying it. Now this is my opinion, but I firmly believe that the cash secure put works if you're okay with owning shares of that, 100 shares of that given stock or ETF. If you're not okay with owning shares of that particular stock and or ETF, then this is really not a good idea. Other than that, that's how you would execute the cash secure put. All right, just to reiterate something, this is not financial advice. This is my trading journey. I'm just merely sharing with you my experiences in the stock market. So what did you think? Was the info helpful? If you found value in the content, please like, share, subscribe. Feel free to let me know what you thought in the comment section. Lastly, I'd like to take a second to thank all of you who watched the video. Thank you for sharing your time with me. And if you want to see more content, click up there. Till next video, love you all. Happy trading, be well, and peace.